Hello and welcome to this four-part video series, The Self-Employed Debate in Conversation with Together. I'm Samantha Partington, freelance journalist for Mortgage Solutions, and today I'm joined by Together's Maeve Ward, Head of Intermediary Sales, Personal Finance, and Nick Parker, Head of Networks and Clubs, and their guests, Paul Zammit, Chief Executive of the Loans Engine, and Greg Cunnington, Head of Strategic Accounts, Legal and General. In our last session, we examined the thought process of underwriters when they assess a self-employed case. In our final installment, we're going to discuss how to spot specialist opportunities, the next steps if the case has been rejected by the high street, and the support and collaboration that goes on behind the scenes. Greg, I'd like to come to you first. I thought we could kick off by just finding out what should be a broker's next move if they've received a rejection from the high street for their client.
Thanks, Sam. Great question. I'll try and tailor my answer because I think I could do half an hour on this question alone. So I'm genuinely going to try and be to the point. I think the first starting point is have a really good understanding of why did it get rejected. It sounds obvious, but we have seen some brokers previously, and we hear this from lenders where Halifax have said no, so they put it in with Santander. Well, if Halifax have said no, there's probably a good reason for it, so get the detail. It doesn't mean it can't stay with the high street. A quote I'm stealing from someone probably in the industry, but has really sat with me, is mainstream has almost become the new specialist. So if you look at some of the criteria changes last year, actually even the high street lenders have some really good niches now. So it could be there's still a home, so don't avoid that. But then the next step, assuming you've got a full fact find, you've got a really good rational explanation, you still believe it's a really good case, but it's not going to go with the high street, is to understand your lenders. And I think that's where collaboration comes in with lenders themselves. So you get some great kind of webinars, education workshops, sessions where people like A3 Sam are absolutely superb. I find a lot of value in those because it's a much easier thing to say than to do when there are over 100 lenders. And I get that heading up the lender side of things at L&G, it's a lot of plates to spin. So you do need some kind of shortcuts there. But also it's remembering there are just so many options. So even if we think of the challenger lenders, I think is it Accord over 25% of their lending was manual underwriting last year, and then you've got lenders kind of like Skipton and Virgin trying to do similar. So it's really have a good understanding, and that should help you know roughly where to go as the next steps.
Paul, as a master broker, where can brokers look for support from the market, from the specialist market, from the challenger market to continue exploring the borrower's options? As Greg just said, there is a vast amount of lenders out there, lots of criteria changes. It can perhaps be overwhelming for a broker that's not particularly used to this market. So where can they look for support?
Yeah, hi Sam. Yeah, great question. Just following on from what Greg mentioned there around the understanding, in order to actually understand the potential opportunity with a specialist lender, whether that be a challenger bank or a real specialist like Together. I'm going to say something, I wouldn't say it's controversial, but the webinars that we carry out or the lenders undertake, it's not just for CPD. Yeah. So I guess there is always the danger that, we run various classes. So whether it's lender specific or in collaboration with a lender or product specific. So we have in our armory, whether it's a second or it's a bridge or it's a commercial or it's asset dev, whatever it may be. We run sessions for brokers to understand how to tap into that market. Now, if they are a broker that only wants to deal with certain demographics or certain products, we completely understand that. But understanding the opportunity in the first instance is absolutely key. Not all of our brokers, for example, if you're an AR of a certain network, they are restricted in terms of what you're allowed to provide advice on or to even package. So actually understanding that opportunity in the first instance is key. Hence why I come back to what I said before. It's not just CPD. I think that, I do understand, that there are many plates that brokers have to spin. Consumer duty, for all it's good, of course, does bring complexities to one's day. From a record keeping perspective, of course, all resulting in positive consumer outcomes. But there is a lot that they need to always consider when running through an application, specialist or not, I guess, these days, especially if you couple that with vulnerabilities, financially stressed type of clients. And I guess, as I said, in the first instance, understanding the opportunity is key. And then second of all, if it's not something that you can offer yourself, is to pass it through to a master broker or act on your behalf. There is that fear in the broker market that if you pass it to a master broker, they might steal your client. That's certainly not something that we operate, i.e., biting the hand that feeds. That's not something that the loans engine will ever. Again, it's in collaboration with the broker.
Maeve, what tips would you give brokers to help them see the opportunity in a complex self-employed case so that in future, should that type of case come across their desk, they've got the confidence to go directly to the specialist mortgage market rather than their first port of call being high street, get the rejection, now what?
I think the first starting point really is the education piece. It's educating and working with mortgage advisors to understand that there are alternative lending solutions when they've tried their traditional routes. And I think that's absolutely paramount if they want to protect their client bank. The reason that I'm mentioning that is they can't afford to do nothing. Of course, that's their choice. But I guess the question I would have for them is, why would you? Because ultimately a customer who has a property ambition or needs to address a financial issue or wants to extend a property, as an example, whatever their borrowing need is, they will find it. And the internet is a wonderful place. And just because their mortgage advisor of 35 years has told them that it's not possible or it's not the right outcome through their traditional route, doesn't mean that that's the end of the road. And a savvy borrower will try and own that journey. So they will still go and look for an outcome, and they will find a master broker or a specialist packager who will have a more diverse product offering and will have educated themselves and become informed of all the other specialist opportunities that are out there. And guess what? They'll be able to help that borrower achieve their property ambitions. Now, that's fine because the customer absolutely has got the outcome and the right outcome for their circumstances. But a better informed broker that has broadened their mindset on the art of the possible, that has drilled down, as Greg mentioned, and asked all the questions that they need to truly understand their circumstances, will also then look to diarise that customer in the future. And it may be that they're on to the next outcome for them. A good advisor will have realised that if they have increased their borrowing, that they perhaps need more financial protection and therefore will have considered their protection needs. So when you have a look at that in the round, the cost of not doing anything for a mortgage advisor is far beyond that inquiry that they said no to. It could actually be their protection income that they've put at risk, but also it could see them lose that customer for life.
Greg, I was just wondering if this might be a concern of brokers. Do they risk missing out on a possible mainstream option that they could have overlooked if they took their self-employed case to a specialist lender in the first instance? Is that a risk to the consumer outcome?
Yeah, definitely. And it's a great question. At my previous intermediary firm, I was the SMF 16, and this would come up whenever I was looking at the monthly compliance reports because we did quite a bit of specialist lending. And also a big part of my current role would be getting some of our key broker partners meeting our lenders. And an often question from the lenders is going, right, what would help you in the marketplace? What's missing? Where are the gaps? What would you like to see us do? The amount of times I see the brokers then say 4 or 5 points and the lender looks at each other and they go, we'd do that, no problem. So there's that almost that communication gap for some of the lenders in the middle, I think, aren't there, where some intermediaries go top 6 specialist, but actually there's probably another 20 or 30. If you have regional building societies, even more lenders who may be priced more competitively. It's tricky because they're so different. So, remembering off by heart which of over 100 lenders does each part of criteria is not straightforward. So you got to feel for the intermediary in that respect. That's where, we discuss some of the tools that can help. But it is a concern. And also, I think we've all got to be conscious that, as I mentioned in an earlier session, I think we saw more positive criteria changes last year than in the previous 10 combined, and including, someone had told me Halifax would be doing 75% interest only, 85% part and part 2 years ago. Santander, 95% new build flats. I wouldn't have believed them. But that also means there's a risk some advisors may be using lenders they were using 2 or 3 years ago, where it was the correct option, but actually, due to updates in criteria, which have been a few times a week, now that wouldn't necessarily be the best option. So really important everybody's upskilling and remembering the best options.
So, Nick, from a borrower's point of view, the borrower just sees the end result, ultimately getting the mortgage that they need, hopefully. But what sort of collaboration does it take behind the scenes to deliver the best outcomes for the customers who fall into this underserved part of the market?
It's a brilliant question. And I think there is so much that goes on to be able to deliver that successful outcome for the client. And it starts with, if you think about intermediary channels within lenders, if you think about mortgage clubs, if you think about specialist brokers and specialist packages, we all exist for the success of that broker. If that broker doesn't succeed in placing his client in the right and get the right outcome for that client, we're all out of a job. So it's really important for us all to work together, to collaborate, to make sure we provide education, support, and access to the right types of lending solutions that broker needs to be able to support his clients. And all of that work goes on in the background. But the one thing I was saying is, it's been said by a number of people on this call already today, is, we put on events. We join events, and as Paul mentioned, it's not just about CPD. It's about bringing that education and raising the awareness of what specialist lending can do. But also, we understand that there is a high street element. Some high street lenders are able to, as Greg said, go up that risk curve and be able to support those kind of avenues. But our job is to be able to help and raise awareness and get people thinking about all the different solutions that exist, that go beyond simple basic first charge lending that you see, because every customer is different and their scenarios are so much more complex. I've said on a number of calls that I've done just recently, a number of different webinars, if you want to thrive in specialist market, there are two key partners that you need to engage with. First and foremost, you need a really good mortgage club that can provide education, resource, the ability for you to be able to understand and navigate this challenging regulatory landscape. And the second is a master broker and packager.
Thanks, Nick. That's about all we've got time for today. I hope you found the 4-part series on self-employed lending interesting and informative. And I'd like to thank all my guests, Maeve, Nick, Paul, and Greg, and thanks for watching.